So way too many market participants will use trend lines in their analysis based off of gut instincts, which is a complete subjective approach in the market, when in reality there is a much cleaner mathematical approach to truly identify the trend of a security, and this is done by using a linear regression, which will identify the true central path of price. Now, for those of you guys that have never seen me and are brand new to the channel, my name is Justin. I am currently enrolled in the CMT program, which is the Chartered Market Technician program, which essentially is just a program which costs thousands of dollars, where you need to invest hundreds, if not thousands of hours to pass a series of tests, and eventually you get those fancy letters behind your name, the designation, much like how a doctor will need to go to medical school, do a bunch of rigorous exams, and eventually you'll see those letters behind their name, right? Just like your dentist, just like a lot of other professions, right? So that is essentially what the CMT program is, and I share this because I want to go ahead and talk about linear regressions, but from a more professional lens. See, in the past, I've made a video, in fact, I'll go ahead and share here on YouTube just 4 years ago on how to use linear regression channels to trade. It got a little over 19,000 views in the last 4 years. However, as time has passed, and being that I've been enrolled in the CMT program, fingers crossed that eventually I'll pass level 3 and I'll have those fancy letters behind my name. I've learned a lot more, and I wanted to make a follow-up video to really break down the understanding of how to leverage linear regressions in the way that you participate in the market. This way you could have a much more successful approach, and hopefully, fingers crossed, are more profitable when you enter and exit the market. Now, before I share how to effectively use these to help increase the success in the way you trade in the market, we kind of have to define what it does. So linear regressions, they draw the best possible straight line through price data, right? It does this by looking at where all the price points are, right? It looks at price and it figures out a line that gets us close to all of those price points at once, which is called the least squared method, right? That's the mathematical approach. And so if price points are little dots plotted on a chart, essentially a linear regression finds a line that runs through the middle of all those dots in the smoothest way. It just doesn't connect highs and lows how you would traditionally use those trend lines that you've seen many market participants use. That's subjective, versus linear regressions are actually objective, right? It's a mathematical approach. And so it finds the overall direction price has been moving using math instead of that subjective guesswork. And so we'll go ahead and kind of do an example of this looking at the S&P 500 over here. And we'll start from the beginning of 2025. Interesting year, right? And let's go ahead and get the linear regression here. We'll start from the beginning and we'll just move it all the way till the end. Now, you're going to find something interesting, right? Because you're going to wonder, well, why is the line sloping downwards when price is actually higher at the end? And that's because linear regressions just don't look at where price started and where it ended, right? It looks at the entire path in between. And so in this case, the sell-off in the middle, it dragged the average trend lower. And so even though we finished strong where we currently are, the overall average movement was still downwards. And that's why the linear regression, or that's essentially why we're seeing the linear regression slope downwards when price is actually higher than where we started, right? That's what linear regression is actually measuring. And so what you might want to understand, because this may be a bit confusing, is that if price is above the linear regression, but the slope is still downwards, what that means is that you want to have a cautiously bullish approach, a perspective for the market. And the reason is because price is recovering, right? It's going upwards, maybe even breaking out above the average trend, but the overall trend based on the average of all these candles is still pointing down. And so it tells you that, yeah, the market has momentum, but it's fighting against recent history. And so how would smart money, right? When we say smart money, we're talking about institutional investors, right? People who, have a lot of education, a lot of schooling, a lot of resources, right? They're using the top of the top, analysts to go ahead and identify when to exit and when to, enter. They would look at something like this and say, okay, well, there's a sustained move above the line. that may be, an opportunity to go ahead and enter. We see this huge gap here, not that huge, but we see this gap over here. And so that could possibly be an entry point. That's one approach. Another approach would be to wait for confirmation of the slope flattening or turning upwards, because eventually the slope, if price were to continue going up, the slope would be going upwards, and that might be another opportunity or area to go ahead and enter if you're trying to go long. Now, price will stretch away from the average, but rarely stay far for long, because price often snaps to the mean, right? This is the mean reversion or average trend path, especially if it moves too far, like we see down here, right? It moves very low, or if it moves too high, too fast. And so imagine the regression line is kind of like this magnet, and price is this rubber band. And the further out that price stretches out, the more tension builds. Eventually, it's going to go ahead and snap back towards the middle, and that's what we call the mean reversion. Vice versa, if it goes too far upwards, eventually price has this revision to the mean. Now, let's go ahead and actually take this further, right? Let's go ahead and actually remove this, and let's kind of go to level 2 here, which is going to be linear regression bands. Okay, so we'll use the same time frame, the same aggregate period, the beginning of 2025 to June 6th, right? And what we see here is the linear regression along with 2 additional lines. These are the bands, and they're done, or they're calculated by using standard deviations. Again, more math here. And these bands, what they do is they give us context as they show how far price is stretching from the average path, right? Because when price hits the lower band, we're looking at a potential mean reversion to the upside. And same thing, right? Going to the upside, it could be a potential mean reversion downward. So think of it, when price is kind of around the lower band, that could suggest that we are in oversold conditions, and vice versa. When it tags the upper band, that could suggest that maybe price is going to stall out and have this throwback down to the mean. And once again, just get attracted to the linear regression. Now, I'm a big fan of repetition and exercise, because that's truly where you grow. Think about a great analogy would be going to the gym, right? You have to do multiple reps over a long duration of time for you to actually see more successful fitness results. And so just like everything else in your life, right, you want to go ahead and do something multiple times. And so I want to go ahead and use this approach and just look at maybe a different security, right? Let's look at a different stock. We'll take a look at Tesla, right? I often talk about Tesla on this channel, and we'll keep the linear regression band on, and we'll kind of just look at this and see how we could identify areas of opportunity. So again, these lower bands suggest that maybe we're in oversold territory, and we see price kind of getting close, having that mean reversion, going back to the linear regression, and eventually breaking upwards. Again, when it passes, it's still sloping down for Tesla, interestingly enough, right? This is a complete, before we were looking at the S&P 500, now we're looking at Tesla, same thing, right? Well, actually, it's a bit different, because not only is it just sloping down, price is actually lower than what it was. So it's a little bit of a variance from the other example with the S&P 500. But regardless, when price is breaking above the linear regression, that could be a potential entry point. However, others who are participating in the market will say, look, I don't want to enter in until the trend is actually sloping upwards. So again, it is objective, but where you decide to enter and exit is completely up to you. Now, we see as we get closer to the upper band, right, it's 2 standard deviations from the linear regression, we end up seeing this acting as an area of resistance, and we see that Tesla stock starts falling downwards. And then once it gets this mean reversion back to the linear regression, it's actually holding up as an area of support. Now, one thing I do want to share real quick, and by the way, if you haven't done so already, make sure to hit that like button, as it really does help out with the channel. Also, consider subscribing if you find any value in today's video. But one thing that I do want to share is that although I am participating and enrolled in the CMT program, looking to earn the CMT designation, although I do use technical analysis and quantitative analysis, which a lot of people think technicians, right, market technicians, they're only drawing lines and little patterns on the chart. There's a lot of mathematical, statistical, quantitative approaches. But regardless, that's just still one data point. I still don't only participate in the market by only looking at one data point being technical analysis, right? I like to evaluate the market by looking at several different data points and having this confluence, synthesizing all this information together. So that's why I'll often not only just look at the charts, but I'll look at what the fundamentals of the company is doing, right? How is Tesla's doing? Are they still profitable? Are they selling a lot of cars, right? That's the rhetorical question. They still are. But what I'm saying is that I'll ask these questions and I'll look into the fundamentals. I'll look into the financial statements of a company and then use that alongside the technicals on the chart. And in addition to that, we'll also look at things like monetary policy, fiscal policy, right? Think about tariffs. Think about, everything that the government can do that can influence markets, right? So if you're interested in learning my approach to the markets and how I use several different data points, make sure to check out some of the links in the description below. One of the links is going to be a link to join the Push and Profit private group, but there's also another link down below that's completely free. And that is my free weekly market post insights, where every single week I send out an email talking about what's going on in the markets. And so if you're like, hey, look, I'm not too sure about you, Justin. Yeah, you sound like you may know a few things. Not sure if I want to join the private group. That's completely fine, right? The private group isn't for everyone. It's definitely not for beginners, right? It's more for someone who is trading but looking to help refine their strategy. And of course, I can't guarantee, that you're going to be 100% profitable, but I can go ahead and share, what my teachings are in the market. And hopefully you can use that to go ahead and refine your approach and strategy, right? But again, it's not for everyone. But if you are interested, check out the link to join the free weekly market post insights. So at least every single week, you kind of know what's going on. And you can still participate in the market with just a bit more knowledge, right? Now, let's actually go ahead and delete this. Let's go ahead and let's go to the S&P 500 again. Let's go to, type in SPY. And, other, things I will do in addition to using multiple data points altogether, right? Technicals, fundamentals, right? I'll also kind of use multiple different technical approaches together. For example, this is, I call this my main chart, where I will use moving averages. Now, of course, in this video, I won't talk about moving averages. I think this video is already packed with a lot of information. But if you are interested, make sure to subscribe to the channel so that you could see what are other pieces of information that I use to help identify if maybe this is a good time to buy into the market, or maybe it's a good time to sell. So hopefully you guys got some value. Leave a comment down in the comment section below. I'll try to reply to as many people as I can. And before you guys go, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.